I don't think we get to $15,000 an ounce gold organically via market forces without it being incredibly chaotic. It'll bring a lot
Hmm.
of political turmoil with it. But, Russia and China are anticipating this by loading up on gold. So, yeah, let the price of it go up, somewhat destabilizing from a currency standpoint, but it also makes everybody richer in their country. China in particular is encouraging their people. Their central bank is buying gold, but they're encouraging Chinese people to load up on gold too. And India, culturally, they've been buying gold and silver jewelry to give as wedding gifts since the beginning of their civilization. And they're incredibly rich when you look at it that way. They've got a ton of real money sitting around in the form of gold and silver jewelry.
John Rubino warned that gold reaching $15,000 an ounce wouldn't happen through calm, natural market forces. It would signal severe global disruption. Such a revaluation, he explained, would likely come hand in hand with political and monetary chaos, shaking confidence in fiat currencies worldwide. Yet nations like Russia and China appear to be preparing for exactly that outcome. Both have been aggressively accumulating gold, with China taking it a step further by urging its citizens to purchase physical metal. Meanwhile, India continues its millennia-old tradition of storing wealth in gold and silver jewelry, quietly positioning its people as some of the world's largest holders of real money. When paper confidence breaks, those with tangible assets will stand firm. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
The gold and silver story is very simple. Those are the old kinds of money that have held their value for 3,000 years. And that's where we hide out when we don't trust the currency managers of whatever money the country's government is using right now. So we pile back into gold and silver when we're afraid of inflation or debasement. And that's why gold and silver are going up right now, because we're afraid of what's happening to the world's big currencies. So that's super simple, easy to understand. And that we had a big correction right now is completely natural because gold and then silver had huge runs. Gold was bumping up against $2,000 an ounce for like 3 years there. And then it finally blew through $2,000 an ounce, and then it blew through $3,000 an ounce, and then $4,000 an ounce without any real resistance. And you would think that big round numbers like 3,000 and 4,000 would just be stacked with people ready to sell.
Yeah.
But it wasn't the case.
Mhm.
Gold just kept on going up. And so finally, people had enough profits to protect that they decided to take a little bit of money off the table. When gold was $4,100 an ounce, that means that going back 3,000 years, everybody who bought gold had a profit to protect. And so it's no surprise that a lot of people sold at that point. And it's also no surprise that some governments decided to jump into precious metals and try to manipulate um, those monies down a little bit, because when they go up like that aggressively, it makes the big currencies look bad. So you had people who had bought along the way up selling, and you had governments manipulating the market via futures contracts and stuff like that. And so you had a reasonable correction, completely to be expected, not scary in any way, and something where, as long as you know you're in a bull market, buying the dip is what you should be doing. And it's been that way with equities for a really long time. The people who bought all the corrections and all the bear markets ended up making money in the end. And I think it's the same way with precious metals now. We've got a long bull market here. As long as governments are overspending and over borrowing, and in that way debasing their currencies, then capital will flow into gold and silver, because that's where you hide out in that kind of a situation. So yeah, the correction that we're having now is normal, natural, and healthy, and we should treat it as a buying opportunity, although I don't know where it ends. I don't know what the bottom of this correction is. Maybe we're already there. Maybe gold has to drop a lot further, but either way, it'll make gold related things cheaper. And let's say you're buying gold mining stocks, that gives you a chance to put in some lowball bids just to see. You might get a chance to buy Agnico Eagle for $20 lower than today or something like that. And in the long run, that's a very good thing. So don't don't be spooked by this because corrections in bear markets basically that is their function. It's to shake weak hands out of the market and put the asset into strong hands who have no intention of selling at the current price. And that process is going on now in precious metals and to an extent the mining stocks. So don't let yourself be shaken out. It's reasonable to be the one taking some profit after a nice long run like this, but don't be spooked completely out of this market because um, until we have the currency reset, the bull market for gold and silver is not over. I think a soaring gold price is the same thing as saying a collapsing currency.
Hmm.
So, if gold goes to $15,000 an ounce, that kind of implies a world where other things are way up too, and that's inflation, and that inflation is really destabilizing.
Hmm.
So, I don't think we get to $15,000 an ounce gold organically via market forces without it being incredibly chaotic. It'll bring a lot
Hmm.
of political turmoil with it. But, Russia and China are anticipating this by loading up on gold. So yeah, let the price of it go up. That's somewhat destabilizing from a currency standpoint, but it also makes everybody richer in their country. China in particular is encouraging their people. They're not, their central bank is buying gold, but they're encouraging Chinese people to load up on gold too. And India culturally they've been buying gold and silver jewelry to give as wedding gifts since the beginning of their civilization. And they're incredibly rich when you look at it that way. They've got a ton of real money sitting around in the form of gold and silver jewelry.
Hmm.
So that rising gold price makes different cultures differently rich. And it definitely helps the guys who've been loading up on gold and silver for the last decade or 1,000 years or whatever your culture has been doing.
Hmm.
And so it helps the BRICS countries in
Hmm.
particular. It helps Russia, China, and in India and several other countries who have been doing this. And it gives them a chance to do the currency reset in a relatively pain-free way by just bringing out that BRICS currency that's linked to gold and that they can all trade with each other with, something like that. Might be almost literally pain-free for those guys. For the U.S., it's tougher because we get the world's reserve currency. And there's just so many dollars out there, and so many people depend on dollars. And when we start debasing the dollar in a really aggressive way, which is the only way we get out from under all this debt, it becomes a huge problem for the rest of the world. That we said that once. I think it was John Connolly back in the 1970s, who was the Treasury Secretary for Richard Nixon, the last time we were aggressively inflating the dollar away, and he said, "Well, it's our currency, but it's your problem to the rest of the world." And we might not be brazen enough to say that, but we'll create the conditions in which it's true if it goes that way. So
Hmm.
anyhow, gold probably ends up getting to $15,000 an ounce, and it's just a question of how it happens. If it's chaotically through market forces, or if it's through governments going back to a gold standard and naming 15,000 as the price of gold relative to their currencies. The guys who run the numbers to figure out where the U.S. would have to price gold in order to back the dollar by like 40%, which is how it was in previous gold standards. They say it's 15, 20, 25, $30,000 an ounce. So, it could be a really big number when the time comes.
Hmm.
And, barring some kind of confiscation, it's going to leave the US and the rest of the world with a lot of rich stackers out there. The gold bugs will inherit the earth in that kind of a situation. So, there's that. That's really the upside to all this, is that the right people are going to have a lot of capital when the time comes. The people who are smart enough to see the chaos coming and take some steps to avoid it. And so, then we will have the capital to help rebuild the system afterwards and protect our families.
Hmm.
So the U.S., along with a lot of other governments, have decided silver is a critical mineral, right? And so there's a lot of buying going on out there that seems to be depleting the physical stock of silver. that's on the exchanges.
Mhm.
And if we see a default on an exchange where they say, okay, we'll pay you cash for your futures contract, but we won't let you take delivery of the silver that you're entitled to do.
Gold and silver remain the ultimate forms of real money, assets that have preserved value for over 3,000 years. As John Rubino explains, investors flock to them whenever trust in governments or currencies fades. The latest run to $4,000 gold and beyond reflected that fear, while the recent pullback was simply profit-taking and mild manipulation, a healthy pause in a long-term bull market. The bigger story, however, is structural. Russia, China, and India are accumulating gold, preparing for a monetary reset that could leave Western currencies weakened and Eastern economies strengthened. Silver, meanwhile, faces a tightening supply as it's reclassified as a critical mineral. Physical shortages and geopolitical shifts could make the next phase explosive. Let's get into the interview.
A company like Newmont is really healthy financially now because they're selling something that has appreciated dramatically, and so they're generating a lot of cash flow on their production, and they're using that cash flow to improve themselves either by paying off debt or raising their dividend or buying back equity, whatever. They're doing good things with their cash flow. But the reason the stock dropped is that their production guidance wasn't as aggressive as people were hoping that it would be. And that's a big problem for the big miners. And it's a great situation for the smaller miners because the big guys just cannot seem to find enough new resources to grow their production. So they're producing lots of gold and silver and they're making lots of money on what they're producing, but they're not producing more ounces each year, which is what you really want in a growth profile stock, right? And so what they're going to do. So anyhow, so people sold Newmont based on the prospect of only the same number of ounces next year as this year. Um, but what that means is a big company like Newmont that has tons of cash to throw around is just going to go out and buy reserves by picking up the junior producers and the advanced explorers who have outlined pretty good resources. So if you've got a deposit that's big enough to move the needle for an entity like Newmont, they're going to be sniffing around and they're going to be talking big numbers for you because that's one way for them to solve that problem. If they just take some of their free cash and they buy the capacity to increase their production dramatically over the next 5 years, then all of a sudden investors will like them again, right? All of a sudden the last piece of their puzzle is in place, and they're not just a solid miner, they're a growth stock that's going to generate increases in capital or in free cash flow for 5 years, which is basically as far as the eye can see from a momentum investor standpoint. So easy fix for somebody like Newmont, and a nice high premium takeout for the stocks that they're going to be buying. So that's a good thing for the junior miners for sure. If you've got a really high quality, for instance, explorer that is outlining a very big, maybe a tier one mine or something like that, prepare to say goodbye to it because somebody's going to come in and just scoop it right up in the next couple of years. And you won't get the 10 bagger effect that you would have gotten if the thing had time to run, but they'll buy you out for 2 or 3 times today's price, which, you can't sneeze at that. You can't think it's a bad thing, even though you wish you would have had more time for this thing to play out. But I don't think that's going to be the case in this market. I think a lot of high quality, smaller miners are going to get bought out in the next couple of years because of the situation that Newmont is in.
Major miners such as Newmont are now sitting on enormous cash flows as gold prices surge. But their challenge isn't money, it's growth. Production levels have stagnated, and investors are noticing. With few discoveries coming online, the big producers face a wall. They can't mine what they don't have. The solution, as John Rubino explains, is seismic but straightforward. Acquisition season is coming. Cash-rich giants will start acquiring smaller explorers and junior producers that hold significant new deposits. For those holding quality juniors with substantial resources, that could mean premium takeouts, 2 or 3 times current prices, sometimes overnight. It's a classic cycle in the mining world. Consolidation follows scarcity. And this time, the smart money knows that ounces in the ground are about to become the hottest commodity of all. If this gave you value, smash that like button, share it with those paying attention, And subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.